Nasdaq 100 has given 19% annual returns in the last 10 years, while Nifty 50 was 6% lower at 13%. But you already knew that. And you're sure you need international exposure in your portfolio for better returns and more diversification. But if you're also feeling too overwhelmed with so many ETF and mutual fund options, then don't worry, I've got you. Before that, a little introduction about myself. I'm CA Vamika from the Wealth Palette, where we invest with clarity and confidence. In this video, we'll discuss top 3 ways to invest internationally. Second, best Indian ETFs and mutual funds to invest internationally. Lastly, tax rates and disclosures you should know about. Okay, so the 3 options to invest globally from India are: first is through investing in Indian ETFs or mutual funds that invest in the international stock markets. Second is direct investments in international ETFs or stocks through Indian apps. Third is through gift city platforms. In today's video, we'll cover the first option of investing internationally through Indian ETFs and mutual funds in detail. For the other 2 options, I'll make separate videos as part of the India International Investing series. So make sure to subscribe to the channel so that you don't miss out on those videos. Okay, investing internationally through Indian ETFs and mutual funds is the most straightforward way out of the 3 options available. You just buy units like any other Indian mutual fund or ETF. But it has one major twist. The entire Indian mutual fund industry can invest only up to $7 billion in foreign equities. And the industry exhausted this limit back in 2022. Since then, only a handful of funds occasionally open for fresh inflows. Next, let's look at Indian ETFs investing internationally. These ETFs trade on the Indian exchange like stocks, so you can buy and sell them anytime. But the supply of these ETFs is capped because the fund houses can't generate new units. However, the demand for these ETFs has stayed high, so they often trade at a premium to their actual value. So if you want to invest internationally through Indian ETFs, what are the options? I analyzed India-based 6 international ETFs and 41 international mutual funds to arrive at this shortlist. First is the Motilal Oswal Nasdaq 100 ETF. It was started in 2011 and is the oldest ETF tracking an international index in India. Its ETF symbol is MON100. This fund has very high AUM and sizable trading volumes. However, its tracking error is high at 1.4%, which means that while trying to mirror the underlying index of Nasdaq 100, the ETF does an error of 1.4%. Let's also check the impact cost, meaning how high is the market price of this ETF compared to its actual asset value, or INAV. The market price on 3rd September is at 202.89, and at the same time, the INAV or the actual value of all the stocks in this ETF is 199.71. So MON100 ETFs are trading at a premium of 1.5%. Impact cost means that you're overpaying for the underlying asset when you buy the ETFs, so your returns reduce to that extent. Compared to the benchmark index Nasdaq 100, Motilal ETF has given 1% lower returns because of its higher tracking errors and impact cost. Look at the returns of MON100 ETF in the last 1, 3, 5 and 10 years. These returns are quite impressive. But past performance does not guarantee future returns too. Please be mindful of valuations before investing. I've discussed US stock market valuation in detail in my last video. Do check that out if you haven't already. Let's look at the other ETFs that invest in the US stock market. Mirae Asset NYSE FANG Plus ETF invests in the top 10 stocks of New York Stock Exchange. It has given crazy returns in the last 1 year and 3 years. But wait till you hear how much premium Mirae's FANG Plus ETF trades at. On 3rd September 2025, its INAV is 131 rupees, while its market price is 162. That means this ETF is trading at a 23% premium compared to the underlying assets. Please check the market price and INAV if you consider investing in Indian ETFs that invest internationally. I've discussed how to check INAV in detail in this video. You can check that out as well. There are also 2 ETFs that invest in the Hong Kong Stock Exchange called Hang Seng. Last 1 year return of Hang Seng has been very high because of government intervention to boost the stock market and PE re-rating. But again, the issue is with the premium of 10 to 12% that you'll have to pay if you buy at market prices. Let's see if fund of fund, index mutual funds or active mutual funds solve for this issue of higher premium. Fund of funds invest in global ETFs. Let's look at which FoFs are investing in US and are open for inflows currently. Edelweiss is currently accepting inflows in two of its fund of funds which invest in US. Let's look at Edelweiss US Technology Equity FoF, which was launched in 2020. It invests in JP Morgan US Technology Fund. Edelweiss Tech Fund tracks Russell 1000 Equal Weighted Tech Index, which tracks 1000 US tech companies, and each stock is given equal weight. Let's look at expense ratios now. Edelweiss Tech Fund has an expense ratio of 0.7%. The JP Morgan US Tech Fund has an expense ratio of 1.71%, which is indirectly borne by Edelweiss when investing in this fund. So in effect, you're incurring total expense ratio of 2.4% because first you paid 0.7% for Edelweiss and then Edelweiss paid 1.7% expense ratio for JP Morgan's US Tech Fund. The total expense ratio of Edelweiss US Tech Fund is higher than Motilal's Nasdaq ETF. On the other hand, Motilal ETF may have a one-time premium when you purchase. So you can weigh your options between these two before deciding where to invest. For US ETFs, there are very less Indian FOF options right now, which are accepting fresh inflows. However, if you want to invest in the Asian or emerging markets, there are still 15 to 16 funds that are accepting inflows. But please do complete research before investing. You can look at AUM, launch date, returns, expense ratios, portfolio, and portfolio expense ratio. The complete FOF list and all these details can be downloaded from the PDF in the pinned comments. Do check that out. There are also two index mutual fund options of ICICI Prudential Nasdaq 100 and Motilal Oswal S&P 500. They are 4 to 5 years old and have sizable AUM and low expense ratios compared to other investing options. Also, investing in these funds would mean that you're not overpaying for the assets like in ETFs, because these funds invest directly in the US stocks and mirror their respective index. But unfortunately, it seems like they are also not accepting fresh inflows right now. Lastly, coming to active mutual funds, where there is a fund manager assigned to decide which stocks to invest in. None of the active mutual funds beat the index they are tracking. Out of the 3 mutual funds tracking the US markets, none of them beat the index over the last 3 and 5 years. The performance of these funds is highly dependent on the fund manager's investing style. Also, these investments have a high stock churn in their portfolio. That means that they're not sticking to their investments long enough. So I wouldn't prefer active funds for international investing personally. To summarize this option of investing internationally, you can invest directly in Indian ETFs that invest internationally. But please be careful that the price at which you're buying should be close to the INAV to avoid overpaying. We narrowed down Motilal Oswal Nasdaq 100 ETF and Edelweiss US Technology Fund as our investing options for US stock market investing from India. But please do your own research before considering these investing options. But even now, the biggest constraint still remains that the industry has reached its investing cap, which greatly limits our investing options. So, the second option is to invest directly in the US stocks and ETFs through Indian platforms like INDmoney or Vested via Angel One. These apps allow you to send money abroad and invest in international ETFs and stocks without you managing foreign bank accounts. Third option is to invest in the international stock markets through Gift City. There are two unique ways to invest in the US stocks via Gift City. First is through the India INX Global Access platform, and second is by investing in unsponsored depository receipts, short mein UDR, at NSE International Exchange. I'm planning to make a series of videos covering direct international investing and gift city investing options in detail. If you want me to deep dive into any specific aspect, do let me know in the comments. Lastly, let's look at tax implications of investing in Indian mutual funds and ETFs that invest internationally. Long-term gain on international ETFs and mutual funds are taxed at 12.5%. There is no 1.25 lakhs LTCJ exemption for international funds, while short-term capital gain is taxed at your income tax slab rate. The only difference is in the holding period between ETFs and mutual funds. ETFs are called long term if you sell after 1 year, but mutual funds will be long term if you sell them after 2 years. Okay, that brings us to the end. To sum up, if you want the simplest way to invest internationally, Indian ETFs and mutual funds are your starting point. But the $7 billion cap means limited availability and investing options. And even when ETFs are available, they may trade at a premium, while FOFs have high expense ratios. We shortlisted MON100 and Edelweiss US Tech FOF. But just remember to compare INAV expense ratios and current stock market valuations before investing. I hope this video helped you understand the international investing options through Indian ETFs and mutual funds in detail. If you don't want to miss other videos in the series, then do subscribe to the channel. This video took me a lot of research, so if you liked the video, do hit like, share it with friends who would like to understand about international investing. Meanwhile, let me know if you have any doubts on this video in the comments. Thank you for watching. See you in the next one.